Pretty good continuation of last week's late strength and the low that was put in for the NASDAQ and Bitcoin on Tuesday is looking like maybe it was a tradable bottom. I'm glad that I dropped the red light from red light on stocks to yellow middle of last week. I don't think anything really changes. I'm being a little stubborn on the dollar still, but we'll see how it trades around the Fed. That's kind of last event. If the dollar slips more on the Fed, obviously that's got to go red. So I've been a little off on that, but everything else seems pretty stable. Crypto's also just real quiet, no real interest in Bitcoin buying today, so that light still stays red until the chart picks a direction. But stocks do look fairly decently technically supported. As we discussed in the last couple sessions, though, there was so much that looked primed for at least some type of floor, a bounce of any kind, and we did get follow through on that, which is good. But today we did it without the big tech stuff, and again, that's fine. It's kind of a Rorschach test for an investor. Which one do you want? When you've got big tech in there, you don't really have to worry about anything else if it's working, and if it's not working like the MAGS 7 were today, then you have to have basically everything else working, and that's a lot of companies that you got to get to rally. So this is a good continuation. And it's a nice session because we didn't have any downside. There was a little chop and not a great close, but gains at this point, we will absolutely take it, of course, if you're long stocks. KG pointed out the VVIX coming down. That's a good sign that maybe volatility will normalize. As a reminder, though, the technicals that I'm thinking about on the chart, if you are bullish and you're thinking this could have a snapback type rally, I'm still thinking about this area from the election gap because symbolically and narrative-wise, that still is such an important level around that 5,750, 5,800 for stocks. So if we do actually turn this into a rally, that's kind of what I'm thinking of for the big upside, is maybe you could reclaim the lost ground from the election level considering how much has been policy-based. But that's kind of my thought on the technical versus the narrative. I think what's probably going to be more important and easier to follow much more simply is just whether or not this cohort stops doing this and starts doing that. Because if it does, and you get the MAGS 7 rallying, then that makes this a lot easier. Here's the catch, though. The statistics that were so anomalous before this sell-off in terms of concentration, in terms of market cap accumulation in those top 7, very anomalous, very statistically abnormal. That would suggest it's unlikely we're going to get back there. So we probably do want to see the rest of the stuff doing better than usual over the last couple of years, especially if there's economic concerns about the U.S. You want to see economically sensitive stuff doing well, and that's generally been a dicey argument considering the retail bloodbath over the last couple of weeks. But today we saw Walmart firming, we saw a couple other stocks like Lulu firming, and that's encouraging as well. The RSP, by the way, on the year now, the equal weight is unchanged. So this is a pretty good way to get your equity exposure right now, just generally being equal weight. And that does fit into the general shift that the market's been going through into non-tech stuff. So even though today was good, it still does kind of leave this headwind about investor flows moving as a challenge, because today you still saw the international stuff do better. Look at the China FXI, massive breakout. This is a big deal, by the way. This is just looking year to date, but this is a multi-year breakout for the Chinese stocks. The EFA, international funds, are doing it as well. So we're still getting a preference for the rest of the world, which is not great for the U.S. story here, but at least we got a good start to this week, and it's a Fed week, and we've got odds of cuts that have gone up. It doesn't seem like it behooves Jay to be particularly hawkish here, so far this does look like we have a window of opportunity. It'd just be a lot easier to rally up a lot faster if tech takes part.